Okay, I don't have comfort, like I don't know where to look to know that it's recording, but
I
it
can
looks
see
like
it
it is.
in the top. Yeah, in the top left, there's a shield and a little red button, and it says Tara started recording.
Perfect. Okay, I'm gonna also turn my camera off because my rural internet, even a video feed, can bog me down and make my audio terrible. So I'm gonna turn me off,
Okay.
and then I'll pop into the slideshow now. So when we did this presentation with AMBA, we broke it down into 3 sections, and it was myself and underwriting. We talked a little bit at the beginning about, who we are, what we do, but mostly the message was to teach about agricultural lending. And I think, your brokerages and others come into this really knowing nothing for the most part. I mean, there are some brokers who are familiar, but we've got a lot of res folks coming in going, well, this sounds really cool. I get calls on farm deals, and what do I do? So we'll talk a little bit about, basically our fundamentals, our thesis, what we lend on, what we don't lend on. Then I'll jump into a couple case studies. I put some together that were BC specific. They're all real scenarios, so that makes them probably pretty valid. Like I picked a few that I thought would really hit home and examples that we get commonly. So these are calls that we get often, and that's why they make great examples. And then in the last part of the slide deck, we'll talk about why this is an important piece for brokers to consider and look at. As you know, there's demand, and this is an untapped market. The problem is for us as ag lenders coming into the space is there's never been anybody to do this. So as a broker, when you get these calls and these inquiries, we are so used to dismissing them because there's never been anywhere to place them that, we now have to open ourselves up to being able to do them, or thinking or believing we're able to do them. And it's going to take time. The bad news is it's going to take time. The good news is it's a really untapped market. So there are farmers out there that need us, and there are brokers out there that need a home for their deals. And really my job today is to try to bridge that gap. So that'll be the last part of the presentation. So I'll tell you a little bit about who we are and what we do. We're new. We've been around for a couple of years. We are a misfit group of investment bankers and ex-brokers, ex-bankers, commodity traders, farmers. We've got a board of directors. On that board of directors, we've got some serious knowledge and experience. We've got Greg Stewart, who is the ex-CEO of FCC. We've got Maury Taz, who's the co-founder of First National. We've got some great counsel coming from that. So we think we've done a good job launching into the channel. It's been about a year, I would say, that we've been going. Today, we are Ontario through to BC, and we are working with agricultural type properties that are commercial farms for food production. So narrowing down our definition of farm will come later on in the presentation, but really at the end of the day, we're here to lend to the farms that need us. We are private funds. We are lending kind of institutionally, I would say, with a bit of a private spin. So what I mean by that is we are structured, we are organized. We're not the old private lender, fax me your deal. So we are doing some things a bit more formally, but at the same time, everything we do is on a case-by-case basis. So it still has that old school common sense feel and spin to how we adjudicate deals. The goal for us when we take these borrowers on, these are not prime borrowers. We want them on our book for anywhere between 1 to 3 years, and then we expect them to be transitioned off back to their FI, whoever that might be. So if it's FCC, BMO, we're trying to correct the issue, which again, not super common in the private lending space, but we want these farms poised for success and that general health, because we are reputationally very careful to not be the lender that takes farms. We never want to foreclose on a farm. That would be a nightmare scenario for us. So when we're intaking a deal, we're looking at the financial health, we're looking at the management, the business plan, the whole picture, and we're making sure that we're structuring so that they will succeed in future. All right, let's look at how we define a farm. So our working language around it is that a farm for our lending purposes is a commercial business producing food for profit. So there's 3 key components there. One is that it's commercial, so we're not doing anything on a hobby basis. We want a business that's active. We want a business that has a plan, that has a management team, and that could even be one person, but we want somebody running that business, and we want to see food. Food is really probably the easiest criteria for a new broker to ag to understand. We get a lot of deals that are marginal, and we'll get into that more. But if there's food, chances are it's something we'll do. So that could be cash crop, that could be beef, that could be dairy, that could be poultry.
Can it be fruit, like produce?
Yep.
Okay.
Yep. We can do orchards, we can do berries. I know there's a lot of blueberry farms in BC. We were very happy with those. Cherry orchards, apple orchards, we're great
Awesome.
with those. Yeah. Greenhouses, you know, I'll touch on it now because it's just coming to mind, but those are, they're case by case. The problem for us with greenhouses is that we're lending on the value of the farmland, and the greenhouses are usually on really small parcels, so it makes them tricky. So it's not to say we won't do them, but it would be very difficult, or it has been difficult for the majority of the deals that we find. Number one, the greenhouses they tend to be cannabis, which is, it's not something we really want to get into. Number two, all of the valuation is in the outbuildings. And so because we lend on land, it makes it very difficult to get to the LTVs we need to, or that the borrowers need to. So that's where we struggle with greenhouses. But, you know, 100 acres here in Ontario and 10 is allocated for greenhouses would be an example of how that could work. And there's probably similar setups in BC.
Yeah, lots of stuff like that for sure.
Yeah. So again, you know, to sort of hammer this point home, our sniff test, what's a farm or not a farm, two parts, right? What's the borrower story? Are they farmers? Are they intending to farm? Is there anything that's agriculture about their plans, intentions, use of the property is the second part. So looking at both of those components, does the overall deal look like a farm? And so things that we're not looking at, right? We're not looking at hobby. We talked about that. A lot of times hobby farms will have an off-farm income component, and sometimes working farms will have an off-farm income component. The off-farm income component is great. The hobby portion is not, because the hobby aspect usually gives us poor land. If somebody has good land, if they're farming corn or they're farming wheat, they're going to have the type of soil that, you know, becomes saleable and good agricultural land. Hobby farms, we see a lot of hay and pasture and things that generally appraise poorly. So that's why we're not letting those. Development land is another one where the values get skewed by urban proximity, right? So when you'll see in my sample deal, there's one in Abbotsford. It was right next to the city limits. It was like maybe 100 meters from the city limit, and it was very influenced by the urban values. So that didn't work. Non-farmers, again, you know, case by case. If a non-farmer is buying a farm, we want to know why. The deal has to make sense. Nominal zoning, this is something I run into a lot in BC and again in Ontario. Nominal zoning, where you have, you know, 2 to 3 acres or 10 acres, you've got a monster house, you know, 8,000 square feet, but it's ALR. And you know, and I know that's not a farm, but brokers don't know that's not a farm in some cases, in many cases, because they call a bank and say, let's do the deal. And the bank says, we can't, it's a farm.
Yeah.
With an 8,000 square foot mansion on 5 acres, that's a farm. So, you know, that's definitely, I should have asterisked that one for my BC guys and my Ontario guys, because that one really plays in British Columbia. Niche livestock, you know, we stick to the tried and true. We've looked and entertained some very interesting stuff. We looked at an emu operation once. It didn't really go. So just to give you some ideas, you know, heritage bred things or anything that's protected or anything that's like a rescue or a petting zoo as we go along that continuum, that's a no for us. High environmental risk. Sometimes farms have machine shops on site. Sometimes it's a really large component. Sometimes there's proximity issues with that. So, you know, for obvious reasons, we're nervous about that. Risky sectors, cannabis, that kind of speaks for itself. We're nervous about cannabis like everybody else. So as a rule, we don't touch it. We have on exception. I'll give the example. We did, I think it was a cattle operation. It was here in Ontario. The fellow had a 5,000 square foot barn that he rebuilt, and he ended up leasing it out to a cannabis company. They retrofitted it. They were growing cannabis on his property. it was a small commercial building on a 100-acre parcel, and you had 2 other 100-acre parcels. It was such a tiny component to the deal that it was fine. We overlooked it. Residential with acreage, I've touched on. Lifestyle or nonprofit, I've touched on. And equestrian is a dead stop for us for many reasons. But we don't do horse farms, unfortunately, even though I just used the word farm. We don't consider equestrian properties to be farms. All right. We did this one a little tongue in cheek, but again, just to recap, I'll leave this slide up. I won't go through it, but for anybody watching the presentation, there's a lot of, actually, agritourism and B&Bs is popular in BC with the winery scene. There's a lot of that. So if there's a big acreage component and it's just the vineyard and it's not necessarily the winery, I think we would have an easier time with that. But a lot of these wineries are very small, 10 acres, 20 acres, and a lot of that revenue comes from the B&B or the tourism portion. Those are generally a no for us.
Okay.
So, all right, moving along. So let's talk about the underwriting criteria. So with conventional criteria, whether it's res or whether it's commercial, the same asks are going to be, they're going to stand out. So we're going to want, not just us, but I'm saying in ag lending, we as ag lenders are all going to want to see financial history. We want it to be strong. At Glengarry, in the private space, we know it's not always going to be strong. So, history is ideal, but if we don't have it, we can live with it. And here's the problem, and you know this just about better than anybody. There's always going to be a bad year.
Yeah.
Sometimes there's going to be 2 bad years.
It's true.
Sometimes there's going to be 2 bad years and my brother wants to buy me out and my parents passed away and we lost a quarter. And like sometimes you see problems stacked and stacked and stacked. And to us, if the deal makes sense and the history makes sense, that's something that we can overlook. Conventional ag lenders generally won't. They want that crisp 3-year financial history with consistent profitability or at least consistent revenue streams. They're looking at cash flow. They want to see servicing. They don't want to flex on ratios. We know that. They want to see strong credit, of course. And I don't know for sure about minimum beacons, but I believe they have thresholds. And when I say it for sure, I don't know what they are. I don't know what FCC or RBC would want for a minimum, but your credit has to be pretty decent, I would think. It's probably going to be in the 640 range. We want to see a good repayment and then capital reserves too. So fallback's important. And then the character issues, which is really big in farming. We want to know, again, we as ag lenders, not as Glengarry, want to know that reputationally this is a good farmer. We don't want any issues with the community where a farmer's not paying bills or they're notoriously, doing something untoward. The next slide, we'll talk a little bit about how we're different. But the reason we did this slide in particular is I wanted to point out that if you look at this and you take agriculture out of it, you could look at that bullet point list. That could be a residential list.
Yeah,
that
for sure.
Could be a resi borrower, good 3 years income stability with employer. Tight ratios, right? There's no flex on the ratios. Can they pay the loan? Is the credit good? Do they pay their bills? Do they have a backup reserve, right?
Yep.
Negative character issues. Have we found any fraud in the docs? So there's the overlap is really big. And the reason I'm pointing this out is that, for the res guys that want to tap into this, they already know this piece very, very well. And this plays very tightly into what everybody, like the ag lenders at large are looking for. So they're a lot further along in their knowledge continuum than I think they are, and maybe don't give themselves credit. And there's a little bit of shying away from, well, I don't know anything about farming. Could I even do these deals? And the answer is absolutely you can. Now for us, our private lending criteria, it's more flexible for sure, but these are our touch points. This is what we really want to see, and this is what we really want to drive home to the brokers. Is the business plan reasonable? Is it viable? Does it make sense? Can we look at, 6-quarter sections and if we do the forecasting, does it look like their cash flow projection? And if it matches, then, then we can go off of those documents. Sorry, Justin, can you give me 1 second?
Of course.
Just give me 1 quick sec.
Sure.
Hi, sorry. I'm just gonna shut my door. Had a little knock on the door. Yeah, so the business plan and the cash flow forecast, we want them to dovetail. We want those to match up because our lending criteria with respect to servicing is not, it's not measured in ratios. It's not
Okay.
measured in GDS, TDS. It's DSCR, which if you know what that is, that's what we're using. It's that more commercial
Yeah.
criteria. But at the end of the day, we've lent on farms where the DSCR is not, it's below par, but we can see in the projection that they'll get there. So if we do a 3-year loan and at the end of the 3 years with projections, we think it's a viable deal, then that's good enough for us.
Yeah, nice.
Security, again, we've talked about the farmland, that is everything, right? We want to see that land, we want to see good land, we want to see good geography. We do soil mapping. We want to know, that whatever is expected to grow will continue to grow in a good yield pattern going forward. And then the management, right? Are they good farmers? So we, again, like the little blurb at the bottom, we're not going to get caught up in numbers. We will never turf a deal because it's, got GDS of 50.2. It's not like that, or the credit score is, 620 or 587. We've underwritten some very poor beacon scores, and sometimes there's very good reasons for poor beacon scores so that it's not a hard stop for us.
Okay, perfect. When you're moving on, do you get into how you guys make the decision?
Can you expand on that?
Yeah. So Jesse, you said you don't consider like TDS and GDS, and we know you look at like the existing farmland and how it's going to be able to produce moving forward. Is there like a method that you use that says whether or not it's going to be good moving forward? Like, is there a rental off sheet, right? That kind of thing, or a rental worksheet, that kind of thing that you have put together?
Yep, good question. It really is, it's so case by case. There's a
Okay.
lot of arbitrary decision making, and there's so many moving parts with agriculture, right? You've got the net worth, which is very important, much less important in residential, but net worth is everything because if something goes wrong, farmers are always liquidating, right? They're always liquidating equipment or selling off quarters. So we want to know that there's a backup plan, but also that tends to be part of the A plan, not just the backup plan. So net worth is a heavy weight. Financial history, again, we don't expect it to be perfect, but if we can see that there's a reasonable demonstration of profitability for the farm, that's a heavy weight. Location of the property is a heavy weight. So we do our own little kind of quasi appraising on the back end here. So we're looking at the property values based off of what we know to be true. And so that plays in as well. We do the financial analysis. So we have a dedicated staff member here who just does financial worksheets, and she goes through everything and makes sure that, things balance and that it all makes sense. And then with all of those things aggregating together, it really is an underwriting judgment call. There isn't one set or list of anything that will get a deal over the line.
Okay, good to know.
Yeah. So when we say case by case, we mean it maybe more than anybody else. It's a lot like commercial lending, right? Like it has to make sense. And yeah, you'll look at square footage, and yeah, you'll look at, location, but the whole package is what we're looking at.
Is exit strategy a big thing for you guys as well?
It is a thing. It's not the biggest thing, but exit strategy usually ties into our cash flow projections, and it usually ties into poor credit, and it usually ties into net worth. So if we see, like cash flow problems, but there's good net worth, then there we may implement a plan to liquidate some things to get them on the other side of the line. Or if credit's poor, we know we're buying time so that the credit issue is fixed. Or if cash flow is the issue, what can we do in production? Or, can we move some equipment out? Like there are ways that we can get them there. So we are part of the exit strategy in many cases.
Awesome.
Yeah. So this was a little message to the brokers. This was sort of summary of what I was saying, that the overlap is there. It exists for sure. And, even though the reason for financing may be different, a lot of the conventions are the same. So in discovery, we have found as long as brokers are asking the questions and getting the story, we don't need them to know a whole lot about farming. We don't need them to know about, quota or dairy milk checks or commodity prices or grain yields. We just need to know the story. Where are they now? Why do they need us? What's the situation? How did they get there? And how are they planning to correct their own trajectories. And then, of course, we would infill. We would have brokers, and we do at times, call us and say, look, I don't really know much about this. What can we do? And myself and some others here will occasionally just jump in, and we'll get on client calls with the broker and talk to the farmers. And so the brokers are learning about what they do, and we're learning about the client firsthand. So it's actually a really nice triangulation, and it helps get some brokers comfortable. So that's something that we have done and will continue to do as long as we need to.
Awesome.
All right, so let's pop into the sample deals. This should be quick. So this was a winery we looked at. It was 30 acres. I'm going to say about 2/3 of it or so was vineyard. Nobody ever heard of it. We couldn't find a whole lot of backstory on it. We had new buyers to the winery, so we didn't understand why they were buying it. It didn't look like they were going to rebrand or change anything. A lot of the revenue, they had a B&B style business. They had some long-term rentals, some short-term rentals. The LTV was low, but the land value, it had a lot of, I don't know, intrinsic value, I guess, because it was in Okanagan, and we just had a feeling that the appraisal wasn't going to come in where it needed to. But the buyer was the second part of why this didn't go. We had this buyer come out of nowhere, buy a winery with no wine experience, no plans for the winery. Their plan was to just expand on the rental business. And so even though it looked like a farm, it really, for our purposes, even though it was a winery, the revenues and the location and all of those things together in checks and balances, like we had the prime location, but then we had this, B&B style business, and the winery really wasn't making any money. So unfortunately, we said no to this one. It was just too off thesis. There was a foreign investment component. It didn't go. And I'm wondering, do you have any questions about this deal? Because it's helpful to sometimes talk about these.
Yeah, for sure. I mean, we see a bunch. I live in the interior as well, so I'm
Mhm.
very familiar with, boutique wineries are all over the place where I live.
Yeah.
So on this one, if we flip this and said it was like a blueberry farm, but the client still didn't have any history of farming, they just came in, well, like this one, right? We'll say the B&B business wasn't a big revenue supporter for that. Would you guys have had a big issue with the fact that they're coming in and have never done this before?
Not necessarily, because the business is a turnkey business.
Okay. So they don't have to come from a farming background, buying a farm. You would use the financials that were based off of, the former 2 years when obviously they don't own it. But you would look at that and then look at the person and then make your decision based off that.
Right. So it wasn't necessarily that they had never farmed before. There's a tiny mention at the end about foreign investors. Everything that they did was fairly untraceable too, so that added an extra layer of complexity. So if we had, BC locals that, had their dream was to buy a blueberry farm, we could probably bridge that gap, because blueberry farms are, again, more turnkey. And I say turnkey because somebody like FCC or BMO will back a blueberry farm. Wineries are notoriously hard to finance. And so if things ever went wrong with this, we know we would be holding this property forever. And that's why the wineries are a bit of a third rail.
Okay, that makes sense.
Yeah. Okay, this one, I referenced this one earlier. It was pitched to us by the broker as a farm. There were, I think, 10 acres. And they were going to grow vegetables on it. They were going to sell at the market. They were going to this, they were going to that. They weren't farmers. They were something like IT professionals. So, is it a jump to say that somebody who's not a farmer is going to, fulfill their dream and be a farmer? No, obviously not. But they had intended to keep their day jobs. I don't know. I don't think anybody was really confident that they were going to farm. I think they were going to nominally farm. I think they were going to throw something on an acre and, maybe call it a farm. I think maybe you can help me out here. Are there tax benefits to being zoned as a farm in BC?
I think so.
Property tax benefits?
Yeah, I believe so.
Yeah, and that happens here too in Ontario. I don't know that it does in the prairies. I'm not saying it doesn't. I just don't know if it does or doesn't, because people don't tend to do that out there. But that's a very common play here, where people will buy a 10-acre property and or 50 acres, they'll let the neighbor cut hay on it, which is basically just wild grass. It's not planted hay. It's not fertilized hay. It's just junk, right? Somebody will farm it and they'll feed it to their cows, you know, or they'll use it as bedding, right? But because it's considered farming, we get a tax rebate for it. So I think that's what was happening here. We really didn't think these guys were going to farm anything. And the house was a beautiful custom home. Like, it was done to the nines. The value was all in the house. So this is a residential deal, you know, wearing a sweater that says farm on the back. And we knew why we couldn't do it. You know, as soon as we saw the house, we knew. And we also knew why the banks wouldn't do it, because they were not getting full value for the acreage. So I said it was 10, but I think it was bigger. I'll backtrack on that, because banks only want to do house plus 5 or 10. So that was a no for us. It's a residential deal, and highest and best use is always what we look at with the property. You know, is it in 5 years, is it still going to be a residence, or is it going to be a farm? And this was going to stay a beautiful residence, but not for us.
Okay. So anyone listening, just because it says ALR doesn't mean it's a farm.
Exactly. We call that nominal zoning, and, you know, we know better. But again, the problem is, you know, these poor brokers, myself included, for years were told that everything that wasn't a house on a, you know, 150 by 300 lot was a farm. So who could blame anybody for thinking otherwise?
It's true.
Mm-hmm. So this was a neat one. The location, I've been to BC. I don't really understand the geography all that well, but I guess that this is a pretty remote area.
Yeah.
And you know, we were leery about the location at the beginning, but you know, the off-farm income was very strong. Not only was it sufficient, but 2 of them were in professional sectors. And that makes a really big difference, because that's a very secure job type. The LTV was a little high. We didn't love the log home, but the land, you know, the acreage was good for where it was. We had a lot of land to lean on, and the land value came in where we needed it to. We got a little bit of extra collateral. So again, you know, this is a little point I should make here. We can cross collateralize. So if for example, you know, we do this a lot in the prairie. Somebody wants to buy a quarter section, they own 10, we'll scrape some equity from the others and purchase the 10 for 100% LTV. Very common play in farming, as you know. So that's sort of something we were able to do here. That extra property helped get the deal across the line, even though the LTV was high and the location was a bit remote. So it didn't, you know, at the beginning, you know, it didn't look like it was going to go. And as we got deeper and deeper into it, the deal just got better and better and better, and it ended up funding, and everybody was happy. So it was a very self-supporting deal. It was a good one. We liked it. Nice. And it was well priced too. We did okay with it. We were able to be a little bit more competitive.
Perfect.
Any questions about that one?
No, not for me on that one.
Okay. All right. So here's my message. Like I said at the beginning, this is a new thing for us as brokers. I'm still a licensed broker. Like, we are new to the gate. We are just introducing farm lending to the broker market, and we're just introducing the concept of brokers for farmers. So we actually have like a 2-pronged issue. Number one, how do we get farmers to know and trust brokers to handle their finances? And number 2, how do we get brokers to know and trust that there are ag lenders out there that they can partner with? So, you know, to the points here, it's easy to send in deals. Like, we're super simple. You know, we encourage a call and a deal run. We don't need paperwork up front. We don't need a submission up front. A lot of times we talk through the deals. We're declining a lot of them because they're horse farms or they're tiny acreage. So once we weed through the ones that don't fit the guidelines, once we have that conversation, we know what we need, and then we can go back to the broker and say, okay, please ask the farmer for a net worth statement, a cash flow projection, 3 years of financials, copy of the milk checks for the last 90 days. Like, we give them that list so that they don't even have to know what to ask for. And then I think another thing that I need to highlight today too is that we pay. So for years, brokers have had to send their deals into banks that farmers could go to on their own and back charge a fee. And that's a really kind of messy conversation to have. You know, I'm going to charge you $20,000 to go to Scotiabank, which you could have done on your own, and you may have in the past. And it just makes for not great relationships. So we pay out in BIPs. So it's a seamless transition there. You know, the last bullet there, like I said, 3 key items needed, you know, I already mentioned them, cash flow, net worth, and the financials. But again, you know, for new brokers coming on board, we encourage the conversation, and you know, we would walk them through it before they went back to their clients, so that they were feeling well prepared to have those conversations. All right, so for brokers who are interested in doing this, when I looked at this list, when I compiled this list, it reminded me an awful lot of when I built my own book in the res space. It's the same referral sources. It's just a slightly different community. So, you know, accountants are a great source of business. Farmers need accountants. They all do. So, you know, we say that in res, but a lot of people don't use accountants. They file online, or they, you know, H&R block it. Farmers and accountants are hand in hand. You know, you've got the equipment dealers, you've got rural realtors, you've got the grain dealers, you've got everybody in the ag community is a potential referral source. And it's an untapped market. So the sooner you get in and position yourself as an expert, the sooner that comes back to you. And the competition is so thin. If I were brokering right now, I would be all over it, because I don't know about BC, but there are very few brokers here in Ontario or in the prairies that are considered to be specialized in agriculture.
Yeah, I don't know any.
Yeah, I know there were a few folks out in BC. I don't even know if they're still around. So it's a good time to be a broker interested in ag lending. I'll say that much.
Yeah, absolutely.
Yeah. All right. Deal structuring. This is probably a recap for everybody, but you know, get the loan purpose together, and knowing your client is so important. There's so much more to it. This is not a cookie cutter res deal. I'd rather have 10 times the story than no story at all. For example, you know, I talked to a broker the other day. We needed history on the credit bureau. And I asked about the beacon. I said, why is the beacon so low? And the answer came back, overutilization. Okay. This poor borrower had like 8 out of 9 trade lines with major drogs, lates. There was an M9. There was all kinds of stuff. The 550 had absolutely nothing to do with utilization. Her credit was terrible because she treated her credit terribly, right? And I would like to think that, you know, brokers would know the difference, but this is part of the KYC. Know the story. Why is your client never paid a bill on time? There's a story there. Find out what it is. So the loan purpose goes back to, you know, what are they doing with the property? Are they planning to live in it? Are they planning to farm it? Are they planning to buy it and lease it out? What's the deal? Are they refinancing? Are they buying another quarter section? Like what, like the whole, you know, the why. And then let's talk about the property. What are they doing on the property? Is it income generating? Is it hobby? Is it growing cash crops? Is it housing cattle? Is it a feedlot? You know, understand the property type. The borrowers, again, know your borrower KYC. Are they farmers? If they're not farmers, why? Why are they buying the property? Back to number one, what's the loan purpose? And the subject property, is it workable farmland? Is it 100 acres with 90 of bush? Does the location align with the purpose and zoning? Back to the Abbotsford example. Are you really going to grow 10 acres of vegetables right at the end of the city limits of Abbotsford, or is that actually a residence? So one thing to note, especially in BC, appraised value is heavily influenced by proximity to urban centers. And because your cities, in my mind, especially around the GVA, they're kind of close together. Like your cities kind of go and then they stop and then there's farms. There's not a whole lot of in between, I have found. And I don't know if you would agree with that or not, but a farm can be very close to a major city.
Yep.
Yeah. And that, you know, that's where it gets tricky. Here in Ontario, and we've seen acreage of, you know, I saw a deal, it was 150,000 per acre. That's not farm, you know, maybe 15, maybe 18, 150,000 an acre. That might be development land.
No kidding.
Yeah. So again, you know, to sort of tie it all up, call in the deal run, always call in the deal run. Always, because there's so many moving parts to a farm. Don't just submit, because we'll never get the story. Those portals, you know, Philogix is great, Velocity is great. They'll give us 5% of what we need. They'll give us a beacon and they'll give us a home address. That's really all we get out of it. Everything else comes over the phone.
Okay.
Yeah. And our last slide here, I know we're kind of crunched for time, but 10 things we want our brokers to know. I've said all of this already. I'm not going to read it, but to recap, when you send a deal in or when you're working with an ag lender, whether it's us or anybody else, these are some highlights that I think are really important that, our very successful brokers know all of these things very well and they practice them on every deal. So I think that's it for me. Let me get some questions answered if you have anything that you haven't addressed as I talk through the slides.
Yeah, it's funny because like you said, we don't really know farm lending. So
Yep.
being able to ask the questions is tough because we don't know what questions to ask. So
I
all this
know.
was fantastic. You definitely addressed a bunch of my questions that I had written down already. Max acres, how you qualify for a client. Yeah, crop sharing, all that kind of stuff. I think you ticked every box that I had
Okay, good.
questions for, which is fantastic. And I'll definitely put this whole thing together and I'll get it out to all our agents so they're all aware of what you do and how to access you as well.
Okay, good. I appreciate that. I hope you can see why it's really hard to summarize this in 10 minutes or less, right?
Yeah, no, I agree. Yeah, no, I had no doubt that it was going to be a longer one just because it's something new and I'm sure I'll get a bunch of questions on it, which is great because then I'll be able to refer them, either to the portal or to your broker kit that you sent that again, I will forward on to the agents once we forward this out.
Sounds good. And then feel free as I send this out, or as you sent this out, sorry, my contact information, my personal contact information is fine to give out. My number, my email, because I am air traffic control for the brokers right now. I am the BDM. Okay. So I'm going to turn my camera back on now. So, anytime there's a deal run, email, call, whatever, let's chat it out. We do have an info at, but that's really more to get like if somebody wanted a broker kit, we would send that to them. So if that's something you want me to send you, I will also send it to you. We're revamping it in the next couple of weeks. We're going to add a few things to it, including the no-flies, the petting zoos. We haven't put it in the kit yet because we didn't want to discourage anybody from sending in deals. But I think we're at the point now that most of the brokers we talk to have seen something like this or have an idea of what we do. So it will be an edited version. If you give me a couple of weeks, I'll get you the fresh kit. Sure. Not the one that we're working on.
Yeah, that'd be great. I have the old one that you sent through and I'll still fire that over just because I don't want to provide the video and not any actual PDF forms. But yeah, if you can forward that new one to me when you have it, I'll make sure that I distribute it as well.
Sounds good. And you know what? The broker kit is it's a very summary document. There's a lot more in here. So if you think that forwarding this presentation on is helpful, you'd be welcome to do that too. I can send it to you as well. But for people that aren't going to watch the video, they might just want it for reference. So whatever you prefer, let me know.
Perfect. That would be great.
Okay, well, you know where to find me with questions.
Yes, I do. Absolutely. Yeah. And like I said, I'll pass along all your information as well. So if you ever get any messages or whatnot from anybody, then you'll know where they came from.
Awesome. Well, thank you so much. Thank you for putting this together. I'm glad we got to do this today.
Yeah, us too. Like I said, it's a completely new era for us. And I just wanted to make sure that our agents have access to it and know about it because that's the first step in getting some deals done is knowing that you guys exist. So
you got it. And you know what? It's broker season. We're getting all broker calls right now. So your timing's perfect.
Fantastic. No, that's great. I look forward to getting this out and hopefully we can all do some business together.
Thank you.
Great.
Okay.
Thanks very much, Tara. Have a great rest of your day.
You too.
Bye now.
Bye.